morning, everyone. Hello. Good morning, everyone. Very excited to have a full house for everyone's favorite topic, banks. My name's Angus de Crespigny. I'm a managing director at PwC, where I look after cyber risk and regulatory offerings for digital assets. Banks and Bitcoin, a topic very close to my heart, as in my previous life I was at EY's blockchain. I looked after EY's blockchain division, and about 2017 got more and more vocal that the killer application was actually Bitcoin, and banks should be looking at a long-term plan for it, which is why I'm excited to be joined by a very esteemed panel. Why don't we do a round of introductions and then we'll dive into it. Roy?
Sure, let's go. So my name is Roy. I'm based in Amsterdam. I work for Binance, as the t-shirt might tell you. So I started with crypto, Bitcoin, back in 2017. I was still studying back in the day. Maybe a funny side story is that I had this one course during business administration. It's called ethics, and we had to start an ethical discussion. And I was trying to get a discussion on Dogecoin, if Dogecoin in fact was even ethical to launch and promote. Unfortunately, we got stuck on what's crypto actually, so I had to take a step back and realize that we were still quite early and a lot of education was still needed. So that's one of the main things that I focus on at Binance. Currently in Binance, I'm an EU regional lead, as we call it. So I'm responsible for the Benelux, as well as the Nordics, Greece and Cyprus. And I work together with all different BUs and many talented people there. That's it.
Awesome. So, hello everyone, thank you for coming. My name is Xavier, and I am originally from Barcelona, although I live also in Switzerland. And I'm the Chief Technology Officer for SEPA Bank. So I think completely up to the point for this conversation. I've been doing technology for a long time. Okay, I did my first startup when I was 18 years old. I've been a hacker myself. Okay, didn't get in trouble, fortunately. Okay, and I'm really looking forward to see, the conversation with all, even maybe some questions from you.
Good morning. I'm Stef. I'm from Kirok. I'm not too far away from Amsterdam because I live in Belgium, Antwerp. Kirok is a digital asset market maker, so we are active as a liquidity provider on the majority of the exchanges globally. We also help quite a few tokenized economies with their liquidity needs. I got into crypto in 2016 by discovering Bitcoin and diving into it. I think a lot of people here. And my responsibilities at the firm is I lead institutional relations. I lead our data science team. So I have a lot of conversation with banks that help us, but also make our life sometimes a bit difficult. So look forward to the discussion today, because I think there's a lot of synergies and complementarities between those entities to making adoption move forward. And I don't think there's anybody better than 4 guys here, 5 guys, to discuss this.
Good morning, everyone. I'm Alan. I'm a writer, investor, and a closet banking nerd, I think, as well. Some of you may know I'm a big fan of the merchant banking houses of Renaissance, Florence, and Venice. Very much hoping Bitcoin can get us some of those back rather than what we have now.
So, guys, hello. So, we spoke before about the perceived conflict between Bitcoin and banks. You've got an asset created specifically for censor-resistant value. You've got banks that have regulatory considerations. There's a very anti-establishment feeling with Bitcoin, and that banks are very establishment. Stef, I suppose we'll start with you. Can Bitcoin and banks coexist, or is there an inherent conflict there?
No, I strongly believe they can coexist, but if you look at it from a very theoretical perspective, you could indeed assume that there's a major conflict and that there's a solution to a problem. I don't think anything in life is that black and white, and I think the complementarity of both of them will actually achieve what Bitcoin can do globally. And I think that a bank is an extremely risk-averse entity, right? At the end of the day, they've been also supporting the scalability and efficiency of capital and the movement of it throughout time, and that has been probably net positive for the world, or that's at least what my opinion on that front is. So I think I see them more as working together, but it has to be under certain rules, and education is going to be key as well. And I think regulation plays an important role. Technical capacity plays an incredible role. And the understanding of Bitcoin as an asset class, both from a definition perspective as actually what the possibilities are, is going to be key. I think Alan can talk about this later on the Lightning network and what the opportunities there are from an interest rate perspective and a banking perspective, and tokenized economies and the credit system that can be built on top of it. But it's not going to be black and white, and I think it's really going to be a journey together towards the industry and the system as a whole that we're looking forward to.
So, you work in a bank. How does your bank see Bitcoin? How do you see the ecosystems relating?
Sorry. First of all, as my colleague, there is no conflict there. We need to work together. Okay. At the end of the day, what we want is to protect the consumers so that they have the best of the market for financial products. Okay. And what we do at Seba Bank basically is to have the best technology possible so that we can deliver, enterprise grade, that it's fulfilling, the regulatory requirements, but also the customer needs. Okay. We actually build up the bank from zero. Okay, so we are not a traditional bank that, we want to touch a little bit, what the crypto is. So we literally been founded to actually help the people to actually use cryptocurrencies, in particular Bitcoin. Okay, so for us is, in our core to actually understand how to do things. So maybe people fight with banks, but we also fight with some other, understand the regulation, understand the clients, understand everything, so that we need to collaborate to make, this cryptocurrency and blockchain technology in general a great success. And from the ethical aspect that you were mentioning before, I think we have a huge opportunity, because for me, it's about getting financial literacy. Getting education on what it means to actually manage your wealth. Most of the people only understand the cash, but now we have a different type of cash. We have a different type of assets, what it means this, and how you manage it. That's where the banks can help.
And I think that financial literacy is an important point, right? You have a big ecosystem that's around, say, gold, that trades it, that accepts it, that provides that liquidity and that legitimacy as an instrument if you want to use it as censor-resistant value in a form of money. You have that separate system which wouldn't be as alive if you didn't have the financial system providing that liquidity and that legitimacy around it. I mean, you can argue specifically for gold that it didn't need that for the legitimacy, but I think in that way, like you say, traditional financial institutions taking on Bitcoin and provides that for the rest of the world that are still learning that this is a real digital asset that has that liquidity.
Absolutely, yeah. Absolutely. Actually, since we are a crypto bank by birth, at the beginning, we actually provide some of our technology to some other banks because they are lost in some cases, or they want to improve and they want to provide more services, and that's what. At the end of the day, we want to do. We want to help our customers. We want to help them to manage their finances. As simple as that.
So I wanted to, if we dig into that a bit, because there aren't many banks that are taking on Bitcoin, that are using that. Obviously, the number one issue that a lot worry about is on the regulatory side. Roy, I know you've done a reasonable amount of work in this. There are perceptions of a lack of clarity. There are perceptions within organizations of uncertainty around how to manage these things. What are some of those compliance considerations that may be holding up that, getting in the way of that adoption?
Yeah, so what I think is regulation has been around for the financial industry for quite some time. They have optimized it, but even with new innovation like the internet, they had to come back on their AML, KYC policies, for instance. But they kept on continuously improving that. And now you have this new innovation, and often regulation lags behind of the innovation, right? You saw the same thing with even Uber, for example. So you had cab drivers driving around, you had regulation, rules in play, basically to protect the customers. However, it took a few years after the Uber app launched, and many people drove with those cars to get actual regulation in play to protect the users, actually. And I think that the same is happening with blockchain technology. So if you look at Binance more specifically, you saw this huge growth, right? We just exist for about 5 years now. And in this huge growth, in the beginning, there was no mandatory KYC. So it was really easy, low barrier for new users to enter the market. However, it's inevitable that regulation will come into play. And it's also when you grow to a certain scale of higher priority to protect the users and protect the whole industry. So we made a full strategy change to focus full on compliance. Now it's compliance first, regulation, and then trying to grow the market with innovation and so on. So we take the legal boundaries, but within these boundaries, we try to, of course, grow.
Alan, you've worked with financial institutions. What's been your inside view on how they're looking at it?
Just to be clear, I didn't actually work in a bank. I worked for an investment manager that attempted when I was there, I hope they still do, to take a very long-term view on technological developments. And therefore, I think I had some success in convincing on the merits of Bitcoin. I wanted to go back just before we moved on to your original question, though. So the idea of whether or not there's a conflict between, kind of an inherent conflict between Bitcoin and banks. I think that there undeniably is, but that to understand that, you need to appreciate the historical anomaly of banking as it exists today. So, one person was applauding that. I was wondering if that would maybe spread. I wasn't looking for applause, by the way. I think it's kind of a straightforward point. It's interesting that we refer to it, I guess, a bit more collectively, including my old job in investment management, as like financial services, which was once true. I think pretty recently was true. Nowadays, it's kind of a euphemism, though. It's really more like it's kind of a soft arm of the state that you have to interact with. It is mandatory to interact with this industry if you want to engage in any kind of economic activity at all. And so I think the promise of Bitcoin is not at all that it obsoletes banks. I'm sure that to some people that's probably heretical for anyone to say, never mind for me to say, but this is, I said I'm a closet banking nerd, right? It's not at all that it obsoletes banks, it's that it makes them optional again. Because I think a key point that Bitcoiners are rightfully fond of pointing out as one of the absurdities of late-stage fiat, if you want to call it that, is that regular people shouldn't have to care about capital allocation if they don't want to. If they want to, that's great. They can get involved with it. They should be able to get involved with it. But you should be able to go through life just having a normal job that doesn't touch finance and not have to care about this at all. And unfortunately, currently, nobody does. You actually, much to some of my own shame, you have to interact, however indirectly, with investment management to try to store your wealth. So I think to get back to the question, yes, there is a conflict with what banking has become, but I think there's enormous potential for a far more, frankly, without trying to sound too corny, just fair banking system, optional banking system that people can outsource their capital allocation to, if they even want to do that in the first place.
Yeah, and I would love to chime in there as well. So there was this previous, or maybe it still exists somewhere, banks versus Bitcoin, right? And I think that in the short term, there is enough growth, innovation to bring on both sides, so it doesn't have to conflict with each other. There are like 1.5 billion adults that do not have any access to any bank accounts. Both blockchain technology could potentially solve this for a big part, as well as innovations and lowering the boundaries for banking access. And apart from that, in the banks versus Bitcoin narrative, we see both the blockchain industry moving towards banks and banks moving towards blockchain technology. Look, for example, at CBDCs, ETFs, strategic investments that they do. Banks spend in total over $1 billion a year in research on blockchain technology. And apart from that, you can also see regulation coming to crypto, making them more financial service providers, closer to banks. Big exchanges are keeping an eye out on more licenses, registrations, including potentially EMI licenses and so on, as well as they want to do more AML, they want to integrate more AML policies. Everyone is doing mandatory KYC, all the big centralized players are doing this. So both industries are moving a bit together, and I think it's not necessarily versus each other. They also serve different goals. Take CBDCs, for example. They are meant to remove some friction for digital payments, but that's not the same goal or the same purpose that Bitcoin at this moment fulfills. So I think that they can perfectly coexist for at least a short future.
Absolutely, absolutely. For me, it's like a second generation or digital revolution. You know, we have for a long time lived in an only physical world, and suddenly we embrace it so much, internet, digital, and so that we have to change a lot of things. That's why there is this convergence between the different parts that make it, relevant for everyone, right? And if we want the cryptocurrencies to succeed, which is at the end what the first slogan you mentioned was designed to, is we need to create familiarity to the product. If you ask your grandmother what Bitcoin is, she probably doesn't know. She probably doesn't even understand the concept, okay? But if she trusts the bank on, oh, I know, and this guy has explained it to me, and then we create familiarity, maybe not for everyone, okay? We are not here for everyone, okay? There's plenty of options, but what we want to provide is what he said, options. We want to provide options to the market so that based on your understanding, your willingness, your wealth, your capacity, your time, you decide what you want to do, and that's why there is these conversions to put, then everything is digital. It's not there is one, everything is digital, everything, every company has becoming digital, the pandemic has accelerated this trend, and then it will keep going, so it's normal that the regulators want to protect the consumers, and that's why also regulators are, working very hard to adapt to this new reality. And this is super good, because that will benefit also the Bitcoin community.
Yeah, and I think it's Bitcoin versus banks isn't the right comparison, right? It's Bitcoin versus gold or Bitcoin versus fiat cash, and banks are large entities, or financial institutions are large entities that will manage those assets. Digital assets are a form of financial asset that can be traded, that can have, additional liquidity provided, and that's very different than actually using the product, sending a transaction on the blockchain in a censor-resistant manner, and exactly, they don't have to conflict. It gives an alternative.
Can I dispute that ever so slightly? So no, you said, I don't mean to be super pedantic, but you said banks will manage these assets. I think a really crucial difference, if not the crucial difference, is that banks can manage these assets and can interact with these assets, but so can everybody else.
Yes.
And so, I should have included this in the previous answer. I thought of it as soon as I stopped talking, that for anyone in the audience, there was an article by Caitlin Long, who's obviously completely brilliant, but in Forbes the other day, annoyingly, I can't remember the title of it, but I remember the argument she makes really well. I'm sure you can find it pretty easily. It's from like last week, where she argues that banks are going to, and actually most financial services companies, right, are going to be forced to become service providers on a long enough time horizon. And the reason is that they no longer have a monopoly of access to what it is they're manipulating, which again, so this comes back to my previous point and points that almost everyone else has mentioned in some or other form, that even though they don't have a monopoly, they will still have competitive advantages in some areas of manipulating these assets. But it is key to realize that everybody can now do this as well. Individuals have the same access as do not even just banks, but Caitlin's point in some sense actually is that even thinking of them as specifically banks is going to become less and less relevant. It will be something that any corporation can do.
Yeah, absolutely. And
they're not there to solve the double spending problem anymore, right? Which was the reason why they were there at the start. And I think, trusting a centralized entity to solve your problem for that is going to be maybe a cost. It's going to be a service, right? And people want to pay premium for it or not. It's going to be their choice. Same for custody, right? I mean, if you think about it, the technological advancements to do self-custody are just there. But it's very hard, it's very difficult, it's not easy to understand, and there's going to be a big majority of the population that is want to start off by having a centralized, trusted entity that does it for them, and you're going to pay a fee for it. Is that going to be bad? No, it's just a stepping stone, and I think technological, financial, economical education on that front will be optional as well. People want to learn about hosting a node. Great. I mean, and that's going to be your responsibility that you have, that, if you make a transaction, it's going to be a bad one. That's an issue, but that was your responsibility, right? And that's you have the right of self-sovereignty. But it all depends on education, and it's optional. So I agree wholeheartedly with the optionality. And banks are not going to be custodians, banks are not going to be payment service providers, banks are going to be consultants or service providers down the line.
Absolutely. I mean, that's what we have in our core, in what we believe a bank is. Our business is to serve customers. How? We will see. It will evolve. How we will be in 20 years, I don't know. But probably, as you say, we will be, delivering a lot of service and so, which we are already doing today. We provide a custody option, but some customers don't want. Okay, fine. We still, do business with them because they want us to help them to, to get a loan to buy a car, for example. So, and they don't want to sell their bitcoins. They don't want to sell whatever. They come to us. They do a security with us. We hold their wallet, and we give them the cash, and then they pay the loan, and that's all, right? So in the same way, try to do that in a traditional bank. So what we want you is to actually use your money, okay? The money, when you have it in the bank account, is worthless. It's just ones and zeros, Only when you use the money, you're actually getting the value of the money itself, okay? That's why most of the financial industry, not only Bitcoin, but all the financial industry is about moving money. Money never sleeps, and all these things that you say in the Wall Street are true. We always want to create liquidity so that the people actually creates and moves the money around. That's what banks were designed to do, and we will keep doing for the customers.
Absolutely, and it's obviously ideally for everyone to hold their own keys, to have their own node would be great. But I think it's something like 40% of people, only 40% of people use a password manager, right? And that's pretty easy to use. So if the assumption is that there's going to be people, like with password managers, that are not going to want to manage their own keys, is it better that they hold it through a bank or don't hold it at all? And, that's I suppose, the question. But, there are challenges, and there are banks that banks worry about this, right?
If we focus again on the custody, we are in the wrong focus. The focus for us is not getting the custody of the customers. We need to do it in some case, or we do it in some case. But our focus is, again, what they said: service. What you want to do with this money? That's the point. That's why the guys from Binance, have so much clients. Because they want to change, they want to use it, they want to move it, they want to trade, they want to. That's it. So that's what is designed for.
Yes, and they want to have the access to these services in an easy and understandable way as well, because education can only go so far. We are here with a pretty tech-savvy crowd, and as you mentioned, password manager isn't being used widely yet. However, I think that many of you also know family relatives potentially that ask how the TV works or to reset the Wi-Fi router, right? So that's the, I wouldn't claim that that's the average knowledge on technology, but the average knowledge on technology is way lower than the knowledge that we have in this room, for example. So we need to find certain ways to get these people involved in the financial systems as well. And I think that their banks as a service provider, for instance, or exchanges could help a lot.
So Stef, I think we spoke about this a bit on the panel. Well, no, we're on the panel, prior to the panel. On why there are reasons why banks aren't coming into this wholesale. What are some of the things that you've found that they worry about, that they watch for?
AML, KYC AML. I think that's the main one. And yes, they can onboard an entity like us, and they, can work with us on a fiat perspective. But when it comes to touching BTC, I think the lack of on-chain analytics, and yes, there are service providers that are forward, but having them being accepted, etc., is one that is very tricky. I think it will get solved down the line, though. I think that they will depend on on-chain analytics firms for them to be able to either provide a service to an entity or facilitate payments. But I think that's a big one. Second one is insurance. The insurance market for it is still very low, and then I'm talking about like hacks, counterparty risk, etc. I think with Lloyd's you can get insured up to 100 million. For a bank, that it's not a significant amount. Let's put it that way. So I think that's a tricky one. And then lack of regulation. If you look at Europe, obviously we got MiCA that is now brought out. It's going to be implemented in a few years, etc. So I think it's a step-by-step process. But it's also costly service, right? So there's the addressable market versus the costs. I think is one as well that they have to take into account. But I think the biggest concerns that we've seen so far is AML. How can we know for sure that the transaction of assets has not been engaged in any type of activity that is not allowed? They're risk averse and they listen to the government as much as they can. So yeah, that's.
We do a little bit more than just review documents, but.
I know, but.
Yeah, but it's true, right? Banks are under supervision of regulators, and they want to keep their business, so they need their banking license. Therefore, they cannot cooperate or collaborate with high-risk partners, for example. So what you see happening is they are a bit afraid to tip their toes into this because of indeed the KYC and AML requirements that are not existing or not widely existent in the crypto space yet. But we see this regulation coming into play. Take the Netherlands, for example. We have this crypto registration. It's needed to be a virtual asset service provider. The same happens with most other European countries. Some countries do not have this registration yet. But this is really hard for crypto service providers to comply with. Why so? It's because every single jurisdiction has its own requirements and its own needs, making it quite hard for US companies or wherever to enter the European market at once. Or locally, if you're from the Netherlands, for example, to go abroad and provide your services cross-border. But one thing is changing, and that's that regulation is being created. So we have this pan-European law, for example. It's called MiCA. It's coming into play. So it will take about, let's say, 1.5, 2 years probably before it actually works here. But that means that we can have a pan-European license as a crypto company to provide these services. So you will apply for it once, you will get it once, and you can passport it throughout Europe. This will be a big advantage for any competitor that wants to grow or any service provider in this field, I would say.
But that's all from a B2B perspective at the end of the day, right? That's the hat that we have. That's the one that we were speaking on today. I think from a retail perspective, I think that's where there's way more challenges, and one is also how can a bank monetize deposits, right? Like how can it give you yield? Where does it get the yield from when it comes to possible BTC deposits? I think it's an interesting conversation as well. I mean, I think you're experimenting on that front, or you have the vision on that one, but I think that's a big one as well. Like, what's the addressable market for a bank today when it comes to deposits of crypto and to provide yield on it? Very tricky one as well. But the moment there's an answer to that, that's definitely gonna spearhead the market.
Yeah, and it's
It's a good one, right? It's like fractional reserves, because I think there's a lot of discussions on, okay, should a future economy in 2050, when it comes to hyper-Bitcoinization, should it be fully fractionalized or not? Or should it be, semi-fractionalized? I don't know. It's fully collateralized or fractionalized. It's a very hard question, right? Because you think about macroeconomics, and I think there hasn't been in the history of mankind a system that has been able to provide credit and the market became more productive and efficient with fully fractionalized or fully reserved economical systems. But again, that falls outside my scope, but that's the impression that I do have there. And maybe the answer comes from the audience, or maybe from you. It would be really interesting to get some perspective on that.
I don't at all mean to disagree with the friendly heckler. I completely agree this is a serious concern that we should be mindful of, but I would also remind everybody that any bank, don't even need to call it that necessarily, could be an exchange, could just be company of any kind that attempts to fractionally reserve Bitcoin is exposing themselves to bankruptcy in a way that doesn't exist for any fiat bank, which is hilarious. And it has happened very recently, and lessons have been learned. So it's not all bad. It will continue to happen, though. So again, I don't mean to make too much light of this. It will happen again. People will lose money. But maybe one way of thinking about it is, for once, the right people will lose money. The people who made the mistakes will lose the money. The losses will not be socialized.
And it's where you get into interesting models, like where you may have I'm going blank on the name. Multiple keys. You're holding one. You can have different custody models with financial institutions, and if something goes totally belly up, then and I think those are interesting models, which segues well into. I suppose what we use the last 10 minutes for. In 20 years, what does banking with Bitcoin look like? What are the financial instruments that we may see develop? Because it's the piece that I think we're all quite interested in is Bitcoin native financial instruments or Bitcoin native banking. I know, Alan, we've done a bit of thinking on this. Throw out some wacky, insane ideas.
So I can't be too specific because I haven't actually gone public yet with exactly what I'm experimenting with, but I can answer at kind of a high level, which maybe will spur some other ideas too. And actually, I think my answer isn't even that exciting. It's more like appreciating what framework of financing companies is even relevant for this. And I think the catalyst is, or maybe catalyst is probably not the right word, because that implies it's going to happen very, very suddenly. I expect this will happen very, very slowly, but the more companies, and then probably individuals at some point too, are able to finance their own activities with Bitcoin, the more obvious opportunity there will be for financial firms to step in and help them allocate that capital, right? And I think that might seem just like really simple and almost pointless in a way, but it is worth lingering on, because this is probably the main problem that needs to be overcome to really achieve hyper-Bitcoinization, because it goes first and foremost for companies that would identify themselves as like Bitcoin companies, right? Which I'm sure many in the audience are involved with or work for potentially. That if some of your cash flows are in Bitcoin because you're doing something that is sort of native to Bitcoin. You're offering that service to your customers. If all of your liabilities are in dollars or in like fiat, say, then you will have to sell whatever Bitcoin you earn. That will keep the price down. That will, it avoids the, it's not exactly a vicious cycle, but it avoids the virtuous cycle of hyper-Bitcoinization. And the root of it all is that you have bills to pay in fiat. So the more you can move funding to Bitcoin, the more you can then move costs to Bitcoin, and then the less you have to sell Bitcoin, because you can just run a business on a Bitcoin standard in the first place.
Steph?
Yeah, it's a big step, that one, because we need to think in sats and we need to think as Bitcoin truly digitally native, right? I think that the fact that we sometimes have a discussion about, BTC reached X amount of dollars is sometimes a bit funny to think about, right? We're all very convinced about the possibilities that BTC as an asset class can bring, but we're still comparing it in US dollar values. I think it's because it's not a digital native currency yet, right? And using it as a payment system is important on that one to be recognized. I think we're still in the store of value, or in the, let's say, investment thesis to be long only from like a speculative perspective still. And I think we need to overcome that. And obviously there are a lot of tools to facilitate that. And I think the Lightning Network, there's been a lot of developments on that front. But I think talking about the Lightning Network is that to support the network and to get yield by doing so, I think is going to be an important one as well, because it gives you a native creation of yield, which you also have in a way with treasuries, etc., because that's going to be the reference being used when you want to create yield and you want to use it as a benchmark. So I think that's going to be essential for that to be able to exist. I don't think it's going to be in 2020. That was 2030, or what's the timeline?
I don't know.
I think you said 20 years.
20 years.
Arbitrarily high number.
Yeah, would be great though. Would be great, but. No, I think that's going to be key actually to really consider as a digital native currency, and to have a base yield because of a system that works, that can use benchmarks for then create services on it, and for service provider to take the spread, and then for banks as well. Like if there is demand and for it, and not everybody wants to go directly into the market, then that's probably the role that a bank is going to play when it comes to credit on BTC.
And that's the bit that I find fascinating, particularly things like Lightning Pool, where you're providing financing to open up Lightning channels, providing liquidity, which is what you're going to need for this to expand. I was speaking with someone yesterday who's working on a way to separate the keys from the nodes on Lightning. I'm fascinated with the direction that sort of goes. In 20 years' time, SIBA Bank, what's SIBA Bank doing with Bitcoin?
I think these are two different questions, but in any case, when at SIBA Bank, when we want to define the future, what we say is that we have to build it ourselves. Okay, so the future is what we do it from ourselves. Okay, so if you want a different future, build it. As simple as that. And what we have seen also is that if you want to predict these long-term, strategies, you need to think from the population point of view. Okay, so who would be the consumers that are, today 20 years old and will be 40, so they're on the mid-age, they will be already working, and so how they behave, what is the products they will be consuming, how they will consume, and if we trust, what is going on, especially in the digital space, there is now a new saying, it says that TikTokization of everything. Everything is a TikTok clone, or Facebook is copying TikTok features, and so in a way, it's approaching this distributed world where there's a lot of different people that do small business, so it makes a lot of sense to have Bitcoin cryptocurrency that allows us to have, our own control. So that for sure, I hope that in 20 years we have this financial literacy that I was mentioning before, so that everyone understands and it works. And then for those that want to keep, rallying the ball and making the most of their wealth, they will be using, services like Binance or, banks or so like mine. and that would be, from the product perspective, will evolve like crazy. We are starting to work with very complicated derivatives on how to actually get, very smart on how we trade, for example, okay, or how we actually create products. There is a product we have quite success, which is an options product, okay, which creates more volatility on top of the volatility, okay, which is perfect for, when downtown goes, for example, and we will see way more, evolution on that direction in the same way we saw it with Wall Street evolution, but with the difference on what he mentioned about, we are not interested to be bailed out again, okay, at least what I talk with other bankers, and so, I mean, there's a brand reputation issue also, but also economical losses that, and I think at least there is a new ethical aspect that the banks, we want to evolve to be more, in line with that.
Yeah, so for the upcoming 20 years, so first of all, we would always like to stay away from speculation, especially when it comes to any prices or expectations on that front. But things that we can point out is that the trend is quite clear. The industry is bigger than ever, regardless of the Bitcoin price going from an all-time high to the current pricing. There is more innovation, more utility being added on a daily basis, and the industry is growing in terms of resources on all fronts. So I think and I expect more adoption to come, and it will be easier to access blockchain technology from a retail user perspective. Also, we will try to contribute on the education front, right? We have to work and tackle this issue from both sides. It's increasing the utility. It's making it as easy as possible in terms of UX, UI to access these technologies, and then to educate the people on how to use it and what's it really about, and to how to engage with this on a way that you can really support your own risk that you put into it. So it's always a bit hard to envision a 20-year future ahead of us. Within Binance, we often say that we focus more on the execution right now. So we have, as CZ himself puts it, we have 2% strategy, 98% execution. So we actually try to do just the next step, because that's always clear what you have to do. And then on the longer run, you will drive results that will guide you in the right direction. It's okay to fail on certain services, certain products, and then redirect yourself. But you just have to execute, try things, and eventually you will get somewhere or in the 20-year future.
Absolutely agree with that. We've got about 2 more minutes, so do you want to just 30-second recap? What should people be taking away about banks and Bitcoin? Roy, why don't you start? We'll go.
Sure. So I would say it's not banks versus Bitcoin. You see both industries moving towards each other on several fronts. And the industry is big enough to coexist. Apart from that, we will always try to innovate, right? What's the next step going to be on both sides? Quite interesting to follow those dynamics. Then another point would be the industry is growing and everyone is looking for more resources. So I joined Binance in June 21. We were with about 2,500 employees back then. Currently, we are over 6,500. We are hiring like 1,000 more at this very moment. So if you don't work in the crypto or blockchain industry yet, feel free to join us and enjoy the ride.
We also look for, we also have job vacancies if someone else. Switzerland is awesome on this time, very green, nice schools.
Guys, this isn't a recruiting panel.
I think work together. That's what we have to, in my opinion, to take from this panel, this conversation, how we can work together to create more and more, and by creating, we will generate the future. That's my summary.
I take the liquidity approach here maybe. I think ultimately the concept of liquidity brings more fairness to a market. I think ultimately that's what we're all going to be looking for. Banks can help with that, right? But it's going to be optional liquidity. And if they can help and support the ecosystem, which I think they will indirectly because the demand for it will be there. I think that's really great. But it's been the first time ever that you can really actually have the option of controlling your wealth instead of having to depend on somebody else to do it. And that's great. And if banks can help us with people making that to realize, even better.
I think it's great that you can now be your own bank. But as has been said many times, the optionality there is extremely important as well. So that shouldn't lead you to think that necessarily there is no need for a bank ever again. If you find yourself wanting the services of a Bitcoin bank, great. But equally, if not, then not your keys, not your coins.
That's it from us. I hope we've converted you all to big bank enthusiasts. Thank you very much for listening. Thank you for having us.